always say the same thing. It's be prepared, be proactive. We say, hey, bank, we understand these are the four corners of what we can work in. This is how we see it that's best for us to get a loan modification or an extension. If you wait, so once it gets into special servicing, they're like, okay, well, you waited this long, so I'm just going to give you X, Y, and Z, and that's it. Well, what about ABC? What about? No, it's too late. You had your chance to talk to us. You didn't.
I love Aspen Commercial Real Estate. I'm staring at the market. 312 South Galena goes on the market. The Prada store. It's on sale for only $85 million for this little property. Can a person get a CMBS loan on a building like that?
They have. I haven't done any financings or seen the financing in Aspen as much as I've seen them done in other markets. So I'll give you an example. We worked on a deal on Fifth Avenue in New York City. Very large, very in the gold district in the between 50s and the 50s on Fifth Avenue for an extremely wealthy family. The problem is that the tenant during COVID left, and the borrower came back and was trying to contact the lender, the servicer, and say, hey, look, the tenant left. They owe us $100 million. We're able to get $95 million. Are you good with that? Nobody answered. So eventually they did it. And then the servicer turns around and said, who told you you could do that? So these are certain things that you have to be protected on. So that's a problem, right? But these loans can be done. It's just a matter of where the market is today and the leverage. And then on bigger deals like that one, right now, because there's so much liquidity in the market, meaning investors have so much free cash that they could use, you're actually competing against somebody who can come in and say, I like that a lot, and I'm just going to buy it tomorrow. I'm going to buy that all cash. So the really, really good properties, those are the ones that are doing really well. So I was just on a panel for a law firm in New York 3 weeks ago, and there was an economist on the panel with me that Class A is already stabilized. So all the really good buildings, the really good locations, all of those are, they're stabilized. They can get loans. They're pretty good. And you're usually, when you're finding you're buying for location anyway, you're not over levering it. You're putting a 50% loan, or you're putting something conservative because this is maybe a family thing, and you're just kind of kicking this down. Now we're into where Class B. So that's all B assets. So that may be you have a Walmart, you have a center next to it, which is, so it's not an A, but it's not a C. So those are stabilizing too. So what happens now is we get the distress, but the distress is a mixed bag of goods. So the distress can either be, hey, I just happen to lose this tenant, and I had this great center, and the grocery store has 2 years left on the lease, and I can't get a renewal loan for it, and I need more time. Or it could be, oh my God, this thing is like downtown Denver, right? And we were talking about this before. So on the office, Denver has the highest percentage of properties in special servicing with the debt service coverage below 1.0 of all the top 25 MSAs, which is 39% CMBS loans of $6.2 billion of total product. So Denver downtown.
Chihuahua.
Yeah.
I mean, I know, but I didn't know it was.
It's bad. It's bad because in every real estate cycle is the same. So what does that mean? It means that there's always a flight to quality. So if there's a better office building for cheaper price, you're going to go to it. So what does that mean? Any building that you don't like so much, you're not going to go. Well, okay, well, great. What are we going to do with that building? Well, if it was built before 1985, you can't knock it down. It has asbestos in it. So what are you going to do with the suburban office building? It all becomes how low of a price you can go. Chicago's having we're doing a number of deals in Chicago, and they're having a very big problem because just like the residential crisis, if you own your house, but your neighbor just foreclosed on both sides of you, your value is their value. You don't, there's nothing great about your thing. It's all commodity.
Wow. Well, I know that Denver stat's definitely going to be a clip that my team makes into a short because
Yeah, well, the multifamily is showing signs of stress as well. The Denver MSA, I'm just reading from my notes, is the 7th highest number of CMBS multifamily loans on the watch list, which is 162 properties or 2.9 billion. They have another 238 million in delinquent multifamily loans, which is the top 10th highest of all top 25 MSAs. And a total of $2.3 billion of loan with a debt service coverage of 1.0 or below, which is the 12th highest. So it is a problem that's going to last us for a while. It's a matter of when the banks and the insurance companies and the CMBS who wants to take the loss when is really the question.
So hypothetically, if everybody takes the loss at the same time, that's when we find ourselves in another financial crisis.
If you have a scenario where the government has been doing a good job of keeping the banks from panicking and dumping, because if one bank dumps, it's a race to the bottom. This is a little bit like The Big Short, just the difference is that the banks aren't under the stress, the borrowers are under the stress. They could have done this during COVID, right? Because banks were like, God, we have this, nobody's ever going to go back. They were saying, I remember in COVID, people are like, who's ever going to go back to a university, right? Who's like, we went to all draconian things. And so by keeping them alive, we're slowly letting this foot, what's happening behind the scenes. And I travel around the country and I speak in a lot of places. I speak to the press, I speak to market participants, I speak to law firms. We've probably done over 30 different presentations on CMBS to the major law firms around the country. Because again, we know something that we're just in the front line and people don't understand what the depth of the iceberg is here. And you find that there's a number of these private equity firms that have billions of dollars that are already buying pools of loans from banks. And because the banks aren't putting out the loans all at once, creating a frenzy in a kind of a piranha tank, that the values are staying higher because they put out one thing at a time and everybody fights over it and bids up the credit. So you've got a lot of hungry investors out there that are dying to put money to work. And I tell everybody the same thing. Be patient because we're not there yet. And because again, if you go out and you think you've got a great deal, if that building next door goes under, you just lost your equity value.
Hi, Chihuahua.
Yeah. Then just to top it off, hospitality is another worrisome area for Denver, with 43% of its hospitality loans have been watch listed. It's 20 loans or 390 million. That's the 5th highest of all the top 25 MSAs. And there are 5 hotel loans currently delinquent, totaling 42 million, with 6 hotels with debt service coverage below 1.0, totaling 90 million. So when you think about debt service coverage, the debt service coverage is the definition of how much is my net operating income, my income after expenses, divided by how much is my debt service. If you're below 1.0, means you can't pay your loan. If you're currently at probably a 1.60 debt service coverage with an average coupon of, I think it's 5%, well, you can't get that today. So when you go get a new loan, you're probably going to have to put money into it. A lot of the things from COVID, when they made these extensions, you're like, oh, this is great. They're giving me a 3-year extension because they're going to use all of my my PIP or product improvement plan money, and they're going to use all my FF&E that I was going to use to buy carpets and furniture. Well, now, and boy, this is great. My franchisor just said I don't have to do that this year. Well, guess what? It's 2025 going into 2026, and your extension's up. You have no more money in that kitty, and your franchisor's going, where's my new stuff? And so you have to come up with that. So either you have to make a choice. You either have to work it out, you have to give the keys back, you sell it, or you refinance it. Those are your choices.
I don't know. Of the choices, I don't like any of them, but long-term holder.
Right. Well, again, you are, but I have a lot of people. I have a lot of borrowers who have short-term memory loss when it comes to, when I cash out all that money at loan closing, which is tax-free. And I made all this last 10 years, it's gone. I'm like, well, I give the example of this. You have the coolest car in your garage. You bought this really cool, I love Corvette Stingray. It's like a really cool, it's a really cool color, and you buff it out, you went out, you got all the great accessories for it, and you shine it every day, and and you're loving it. And you got a loan for this. And now you lost your job and call the bank, and the bank says, okay, well, I need my loan. And you're like, well, I love this thing. I want to hold it. I think it's an heirloom. And my God, like, how could I ever give this thing up? And the bank said, well, how are you going to pay me? Like, well, I can't really pay you, but I really love this. Well, guess what? You borrowed. So it's just a matter, again, how you negotiate. What we do at Bright Capital Advisors is where the borrower doesn't have a lot of rights because they don't have a lot of power, right? What's your power? I'm not going to pay you, or I'm going to pay you, right? I'm going to sue you, or I'm going to pay you. Those are your two choices. But you do have an ability to effectuate your own change if you have the right and you have the right advisor with you. Because we can tell you what the parameters of what you can and can't do. We can tell you what the market trends are currently happening. We could tell you what to expect when you're going into service and your special service. And so you know that when you're going to incur fees, how you're going to incur fees, why to start dialoguing early. We start to talk and giving you and your attorney, we talk to your attorney to make sure that there's no risk of somebody coming after you personally. And so we now know how to negotiate. So, and because we understand the back of the house, that side so well, we can kind of see, I can't say the whole thing, but it's like a doctor. You go to the doctor, you're like, hey, I have this rash. Well, what's going to happen to me? And you're like, well, I can't tell what's going to happen to you, but I can kind of tell you what's been happening to other people and along the way. So at least you're prepared. If you follow me on LinkedIn, I post a lot of stuff, and I always say the same thing. It's be prepared, be proactive, because if you're prepared, then you can actually what we do is we make the workout on your terms. We say, okay, this is what we're going to prepare for you. We're going to, hey, bank, we understand these are the four corners of what we can work in. This is how we see it that's best for us to get a loan modification or an extension. If you wait to go into I have a lot of people with their heads in the sand waiting to go to the bank. And then the special, once it gets into special servicing, they're like, okay, well, you waited this long, so I'm just going to give you X, Y, and Z, and that's it. Well, what about A, B, C? What about? No, too late. You had your chance to talk to us, you didn't.
Yeah. Whew. Too late. Let that be a life lesson, not just a commercial real estate secret.
Yeah, it's correct. The secret here is communication.
Okay. I was just going to ask you, what is your commercial real estate secret?
My commercial real estate secret is that we have access. We sell access. My access is to every master's CMBS special service and every CMBS special servicer in the marketplace. Why? Over the last 5 years, we've delivered really good product and become very successful because we understand our clients' needs and we let them know up front whether we can do this or not. And the servicers understand that we understand exactly what they know. So when we come in and we have a full package that's socializable amongst the different parties, because the decision makers sit in 3 different companies, so to speak. You have a master servicer, who can be a Wells Fargo or KeyBank, who then has to talk to who does administrative things, that if you want to change something, has to go to the special servicer, who can be an LNR, K-Star, Rialto, but then a lot of times you have a different bondholder who's actually the key decision maker, called the controlling class holder. So it's 3 different groups that have to socialize together. So if you are able to put a complete package together and you're able to put all the things that the borrower needs into it, and they say like, wow, this borrower is the best shepherd to take this through. I want to work with this borrower because you know what? This borrower is going to get us through this. And they have to have money. You have to bring more equity to the table. But if you do that, you're going to create that. So why Bright Capital? because we're not lawyers and we're not tax people, we're not lawyers. So we keep everything on the business side. We know the people internally at all these services, special services, they know us. They see our letterhead. We get to the top of the pile. We understand what the issues are. We can tell you those issues based on all of our experience. So we have, and honestly, I work with a lot of these people, either for or with, or they work for me in these seats. I never go and call the top guy and say, hey, I got this deal coming in. I need you to fix it. I go through the system. And if there's a problem, we call and we let those people know, and we can get that attention that we need. So it's a awful system. Everything is backed against the borrower. A lot of people call their attorneys, and the attorneys go against attorneys. You're building up legal fees, and it's going nowhere. So that's what we do. Access. Like doormat.
That was a big secret. No, Mr. Cohen, I'm only laughing because this is so much information. I don't know if this is going to be one podcast episode or two, but it's been fantastic. So thank you for your time.
Yeah.
For the listeners, maybe they live in Denver and they own an office building.
Yeah.
Where can they find you, follow you, find Brighton Capital Advisors, etc.?
If you go on to the website, if you actually go into Perplexity or one of the AIs and you type in CMBS Advisor, our name's going to come up. We post a lot on our website. So again, there's a ton of information. It's so if you go on BrightonCapitalAdvisors.com and you go on, actually what we're starting to do, which you will be on this, is we're starting to post our podcasts. So you can have the different people I'm talking to are asking me different questions. You can ask it. In fact, one of the things we're putting on our podcast right now, or not on our podcast, but we're going to put on our stream, is very simple questions of what should you expect when you're going into special servicing? And me and my two other advisors, we're each answering that one specific question, because what we want to do is give you the insight to know what to expect when you're doing this. So, and we also post a lot of articles where I've been published. And I'm not promoting myself in these things. I'm telling people what I'm seeing on the front lines. And that is the key to the success of this. And so if you're in Denver or you're in that metro area and you're saying, well, I have a CMBS loan, maybe I have my reserves that are stuck. Maybe I got into a debt service coverage trigger with cash flow sweep and I can't get out of it, but I don't understand why. Maybe you want to release a property and you can't. Maybe it's a loan assumption that's stuck. Maybe it's you're in some sort of a default, but you're really not in a default. Maybe you're trying to get something done which is good for the property, but they won't let you do it. Call us, because we're the ones that understand those situations and how to handle it and tell you what your best strategy is.
So thanks for watching. Don't forget to like, subscribe, comment, and here are a few related videos coming up next.